let's just start with some quick introductions. Let's start with you, Petra. Just a brief introduction of yourself and the company, and then we'll move down the panel. Petra.
Hi, good afternoon. Petra Blaskova from LaSalle Investment Management, and my role is to set up the strategy for our core and core plus funds. So obviously it is, for us, it's about the cities in which we invest, and we're quite specific about that and what we like and what we don't.
Perfect. Solly.
Hi everyone. Solly Gabe of Solly Gabe Consultants. We're a small bespoke chartered surveyor firm. We do tenant rep, investment transactions, asset management, mostly with institutions. And we're based in Paris, so we're based smack bang in the city.
Perfect. Florian.
Hello everyone, my name is Florian. I'm working for Swiss Life Asset Managers. So when we look at real estate, we manage beyond 100 billion of real estate across Europe for institutional as well as retail clients. And my role within Swiss Life Asset Managers, I'm heading the real estate development activities across Europe.
Super. Claire.
Hello, I'm Claire Thomas. I'm a partner at the law firm CMS. We've got one of the largest real estate practices in Europe, and we've got 70 offices across the world. And I'm delighted to be here with 82 of my lovely colleagues today. So there's a few of us if you'd like to meet.
Super. And interesting to see as well that in terms of the audience here, how many were you last year, Claire?
We were less than half that.
Yeah, so interesting to see from a couple of local ones about how much actually tractions had increased this year versus last year. I mean, it's interesting, in all the discussions we've been having, we've almost seemed to have forgotten that there was a COVID crisis. And that there may well be, more to hear from that, over the autumn as we move on. Petra, let's just start with you. I suppose to try and put this into some kind of context, how do you see sort of the last, let's say if we go back to Expo 2021, how do you see the changes since then? And I guess how are you seeing that in terms of your research?
Okay. Many changes, obviously. We just released our we call it ECGI, European City Growth Index, when we look at the cities which can outperform, which can grow, and ultimately generate real estate demand. And from that perspective, we actually see that many cities have ahead of themselves quite a big challenge going forward. In this year index, it is the largest number of cities whose performance is due to decline since the global financial crisis. So it is actually quite a dramatic outlook for us moving into 2023, and we certainly didn't feel the same way last year when the same index has been published as well. So quite a big challenges ahead of us for the cities in particular. Yeah.
Okay, good. And Florian, maybe coming to you, just how are you seeing those? Because obviously you're coming at it from a slightly different side there.
Yes, I mean, not that we have copied LaSalle, but we also do have a city index which we publish, where we look at 135 cities across Europe with 5 underlying themes where we try to identify, what drives the growth in those cities, and we compare those to each other. So that's a little bit of a guideline for our investment strategies, how we invest across Europe. So we also see challenges ahead, but sort of the view we take is very long-term oriented. Yeah, so that's how we try to invest in real estate. Yeah, we have, coming with an insurance background, 160 years of real estate investment, so we have a very long-term view when we invest. So yes, there are challenges ahead, but we still see very good opportunities across Europe for investments with a longer view.
And maybe I'll come to you, Claire and Solly, in a minute. But it would be interesting, I think, Florian and Petra, just to get a sense of, are there cities that are coming through as stronger than others? Have there been any changes in terms of the research that you're seeing? Let's start with you, Petra.
We still see London and Paris really staying at the top. London is number one. And that's the message which hasn't really changed for us in LaSalle in many years. Those two cities are really dominant. That said, obviously some of the regional smaller cities in UK or in Italy, partially even in Germany, we see that the decline is happening there, so that concentration of growth is really getting smaller and smaller and concentrated into a smaller group of cities ultimately.
Okay, good. And Florian, for you, has there been change, much change in terms of the research that you've been looking at?
Right. I mean, we haven't seen that very fundamental shifts in our city ranking, and in our ranking also like London and Paris are in the top 10. London number 1, Paris is only number 10 in our list, but still in the top 10. Surprisingly, maybe that has to do with our Swiss background. Zurich is number 2 in our ranking, but well, there have been some shifts in our ranking, but not big surprises.
Okay, good. Let's pick up, because obviously, Claire, you're based in London, Solly, you're based in Paris. Let's pick up, I suppose, just on your view as well on the Paris market at the moment, particularly thinking about, I guess, the current factors that we're seeing and some of the key trends you're seeing there.
Well, yeah, of course. I mean, of course, Paris is a big world city. The context is small historical city, but a very big greater city. Of course, France is a very centralized country, so 35% of the nation's GDP is produced in and around Paris. All the major universities are around Paris or in Paris, so there is a lot of motivation to work and live in the center. Over the past 2 or 3 years, we've had COVID, and we've had the remote working generalization, which I think is part of the work scene in Paris. People do tend to live closer to their workplace, so we haven't got the same situation as London, where we have the tyranny of the train back to the suburbs, and people prefer to live and work in the suburbs. That's not the case in Paris. And we're beginning to see lifestyle choices happening in the workplace, where people are, especially younger professionals, are looking at living out of the capital in places like Nantes and Bordeaux for lifestyle choices. And that's a new phenomenon arriving in the French context and the capital city context.
Okay, that's interesting. So that picks up in a way, Petra, maybe what you're seeing in some of the responses in your research. And Claire, just coming to you in terms of the London side, what are you seeing there? Obviously, there's been a huge focus in recent days about the economics, what's been happening there, interest rate rises, U-turns, insanity on politics, but I need not go further. But I suppose, what are we seeing there? And I guess, how do you see the prospects at the moment, particularly for London?
We were talking about this at breakfast earlier, actually, and one of my colleagues said that we've had financial services in the City of London for 400 years, so they're unlikely to go anywhere sort of fast. Also as well, the pound is weak at the moment, but I think that does give opportunities for international investors. But I think at the moment you will have many institutions wanting to see more government policy and how that settles down, but certainly lots of opportunities for family offices and private equity who can take advantage of opportunities at the moment.
Good, and I won't ask you this question, that was for somebody else, but I mean, there was a lot of discussion at the time around Brexit, and therefore I was having discussions around Amsterdam, Paris, Frankfurt, all benefiting from that. Have we seen that actually coming through in terms of Paris or Petra? Are you seeing that across any of the other cities? Is there a Brexit benefit for other continental cities?
I would think so. I think that the continental Europe side, or the continental European cities, starting to benefit. And one example could be Amsterdam, for instance. In our index, it is for the first time in 20 years back in top 10, and that's quite a strong message as well. And in general, we like the Netherlands and that the growth and that potential that it's there. And I could only imagine that one of the reasons for that is the post-Brexit and the shift of some of the skilled labor into the continental Europe.
Okay, good. Did you want to pick that up?
Yes, there has been a small transfer of jobs because of Brexit into Paris, namely in the financial area, about 1,000 jobs. which is significant but not very important. But I think the importance of Brexit vis-à-vis Paris as a capital city is that today in the euro, in the European Union, never mind the eurozone, Paris is now the major large office market, the major large business city, and that is a new phenomenon for France.
I think the benefit of Paris also is its ability to innovate very quickly as well, maybe a little bit faster than London can do sometimes. And you see it on that some of the companies in tech and in the data and innovation, that they're growing really fast in Paris. And as London is staying the financial center, Paris is taking the innovation hub kind of title.
Yes, I agree. And in fact, in Paris and France, it's become a center for capital raising now for high-tech and fintech companies. And that also we're seeing in places like Nantes as well. So it's not just Paris, it's happening in smaller cities as well.
And are we seeing I'll come to you in a second, Claire, because I knew you had something on that. Oh, are you seeing more, I suppose, capital beginning to look at those sorts of secondary cities rather than just the main capital cities? What's the investment side doing, Florian, maybe?
Well, our investor base is predominantly very conservative. I mean, same orientation probably as we have within Swiss Life. So I think what we see is an orientation more towards core, more or less. Yeah. So we don't have those very much value-add type oriented investors, although I think there are opportunities coming in that segment. But that's not quite the investor base we have. So the investors we are working with is core oriented, looking at best locations. I mean, Paris is a good example. I mean, we engaged in a large development in Paris near La Défense. It's becoming a headquarter of a large company, very much ESG oriented, 70% on-site energy production, etc. So, and that's a core investment, very sustainable, long-term oriented. That's where we see demand for.
Okay, good. And Claire, you wanted to pick up?
Yeah, I just wanted to pick up on some research that we've done actually, which is very relevant for today because it looks at the future of towns and cities. And we polled over 300 global real estate investors. And we also asked over 15,000 global consumers what they want from their sort of towns and cities. But I just wanted to pick up on the sort of Brexit point. 85% of our global investors still felt that London was the financial capital of the world. So I think in terms of and they weren't all actually from London, but I think that gives a strong sense of what we are seeing. And I think with Brexit, one of the things that does have an impact is supply chain issues and the issues that we have in the construction industry and with employees in terms of the hospitality sector. So I think there are some other byproducts of Brexit that are having an impact.
Okay, interesting. And were there any other key kind of things that came through from that survey that you did in terms of what people were looking for in their cities and towns?
Yeah, we wanted to study as to whether the way we used our cities and towns would change post-COVID. And I think there were some strong themes that came out. People were concerned about sustainability, empty shops, and just pollution. So there were some strong themes, but people want open spaces, they want a sense of community, and that maybe doesn't always align with the real estate sort of sector's need for returns. So it's that balance in what consumers want with what's going to generate returns for the real estate sector.
Okay, good. If anybody's got any questions, do just raise your hand, shout out whatever is necessary to make sure that I notice that you've got a question, and we'll deal with that. And again, if you're joining us online, welcome. But also do feel free to put questions in the chat, and I'll try to integrate those as we go through. Petra, you had a point you wanted to pick up.
I wanted to make a slightly controversial point about the cities, because
we like a bit of controversy.
In our view, every city would have it's not just about the cities, it's about the micro markets or the sub-markets within those cities. Every city, even if it's possibly small or not doing incredibly well overall, there is always that one location which grows. We call them confluence zones, which is the areas where people like to come in, they like to work, they like to play, they like to go to the cinemas and theaters and dinners. And it doesn't necessarily matter how well you are in the ranking, but the life is there. Hence, from our perspective as a real estate investor, you still have that demand and that growth is still there.
I just to come through on that point. Also, an aspect of big cities is they have their own critical mass, irrespective of cycles and where rents are going and interest rates. They have their critical mass. They are so big in that, Paris with its 55 million square meters of offices and 13 million population in greater Paris. There are things that happen irrespective of cycles and crises, and there are refurbishments, there are renewals, there are growth areas in micro markets, and for investors, if they're players in these big capital cities, then perhaps a crisis can bring forward opportunities which they can exploit because they've got a competitive advantage. They begin to know things that investors who are less close to the capital city don't know of.
And Claire, you wanted to pick that up, did you? And then I'll come on to the ESG point, which I think is really valid.
Yeah, absolutely. And I think what came out of our report was that people are still going to cities, but maybe buildings need to work a bit harder to attract people back into the cities. We all know that sort of working from home was very convenient for many people. So we sort of have this office versus the commute concept now. And if you don't make your office attractive, then, you won't get people back in.
Can I add something to that? I mean, that's a good point. And I mean, for quite some time, we were looking into more or less district developments, right? So there you have the opportunity, within the city to really shape a district, right? I mean, it's very long-term oriented project, and you have to be prepared to take some risk in the development, but you actually can create something which shapes a city. Attractive workspaces that people are looking for, combined with sort of living spaces, cultural offerings, and you are actually in the position to create all that, right? So it's not everywhere, but there are opportunities in cities, and we have taken those, for example, in Basel, in Frankfurt, and also in Düsseldorf in Germany, where we have projects like running for 10 plus years. But we are about to create a district in all those places. Yeah, and
that's interesting. And so maybe it would be interesting to pick up, ESG, obviously a big topic here at Expo Real. But within that, in terms of the cities, we're also looking at resilience, sustainability of the investment, especially when you're looking long term, which I think you have to often in cities. How do you see that playing into areas like livability? It's interesting you mentioned there about people worrying about the emptying out of town centres, emptiness of shops. How important is that sort of activating street level, livability, creating those interesting areas for people to live and work together?
I would think it's primordial. It's very, very important. And we even see it in a city like Paris, where La Défense has always had a problem of creating mixed use. It's primarily a skyscraper office area, and mixed use is difficult to come by in La Défense. It's not the same in Paris, where mixed use, living close to your workplace is quite common, and people do seem to want to work and play in the same area. And that, I think, is going to be reinforced by not only by the COVID and the remote working generalization that's happening, but perhaps furthermore as we face the challenges in the next 18 to 24 months economically.
But I also think that some of the smaller cities in Europe, not London, not Paris, will start to benefit from this livability element on living in greener cities, smaller cities, less commuting, better life-work balance. So Munich, for instance, Barcelona, Amsterdam, that I already talked about a little bit. from that perspective, they certainly will become more livable than the big metropoles of London or Paris.
And I think London is actually very aware of that. We have a new city planner who's been in his place now for 6 months. And I think he's really focusing on destination city. So we know that London is great for business, but how do you get people there and how do you get them to stay? And I think a lot of it's around creating a sense of community. I think 22 Bishopsgate is a really great example, a new AXA development, but it's actually open to the public. So they're thinking a lot more about how do the buildings work for the whole of the city, not just for the businesses that occupy them.
And also, how does one square the circle of ever rising residential property prices, even if we go through cycles, historically they seem to rise. And that is a major problem, I think, for recruitment in big cities. Is co-living, is quality co-living an answer? I have no idea, but it seems to. There are a few funds here that are investing in co-living in major cities. Is that the answer, or are we all going to co-live at some point in our lives? At the beginning, at the end, who knows?
I mean, it's an interesting focus as well, that around affordability, which I think does have an impact. And obviously we've seen, particularly Berlin, looking to maintain that idea that you can have a young, mobile, successful, innovative group of people coming in and affording to live there. Do you think that's going to be more key as we see, we've got energy costs going up, we've got a cost of living crisis. Do you think there'll be more cities trying to maintain that type of ability to attract younger, more entrepreneurial workers, maybe the people who are just leaving university or those kinds of people?
Yes, I think quality co-living is going to be an asset class which will be more predominant in both big cities and places like Marseille, which again is a big city, and other regional cities, simply because mobility has entered the workforce within the younger generation. And if there's mobility in the workforce, there can also be mobility in the living space. And I think we're seeing part of that happening now.
Florian.
Yes, I think it's a key success factor for cities that it's attractive to live there, right? Otherwise, companies won't come as well, right? So you need to have the workforce, and the war for talent has already started. We probably all face it in our companies already. How tough it is to acquire new talent. So I think as a city, you need to be attractive for living. It needs to be affordable. You need to have the infrastructure as well. Not only public transport, but also digital infrastructure, which is important. So there's many ingredients to make a city a success, and living is certainly a big part of that.
It's interesting as well, and I'd be interested to get your views on it. But obviously in London, we've seen quite a bit of change in terms of whereas before financials were all in the city, then they were also in Canary Wharf, but now you're getting movement into the West End where there's shopping. You're then getting life sciences moving into Canary Wharf, and that's not something I would have imagined kind of 2-3 years ago. Is that something that we're seeing in other European cities as well? Are we beginning to get shifts about where traditionally office space is now people actually want to be closer to retail or cultural hubs? What are we seeing?
Yes, I think that's a very, very important point. Of course, London has always been very segmented historically. The city, Hatton Garden, Lloyd's and Holborn, etc. Places like Paris, less so. But I think to a certain extent, the Visio meeting has, to a certain extent, rendered less important the idea of similar industries being in the same district. Of course, if industries are very specialized, there is a rationale to having a hub, and those can be business park hubs or even out-of-town business park hubs to encourage the same sort of industry. But I think that we're going to get, at least in certain continental cities, less segmentation geographically.
So that's really cities beginning to catch up with something that's maybe been around for the last 200, 300, 400 years in terms of people needing to be physically together and that change. And that's an interesting point, I think. And in terms of the sort of, mixed use planning side of it, how do we see planning? Is planning generally, cities generally being supportive of what investors want and what occupiers want? Or is there a sort of crossover point here where actually investors aren't getting what they need, cities aren't getting what they need? How's that discussion?
Concerning Paris, I think a lot has been learnt on both sides over the past 20 years. City planners seem to understand the capital importance of Paris in terms of money being invested, capital being invested in the city, and have understood over the years that investors need a return, and they need a rational return. Similarly, investors also understand that there are certain planning needs for the community that can't be circumvented. So I think there is a sort of meeting of the minds, which I didn't really see 25 years ago.
And I think certainly in the UK there have been some changes that make planning easier now in terms of permitted development and being able to switch from office or retail to residential. And one thing that came through in the report was 30% of real estate professionals said that they were already repurposing significant parts of their portfolios and would do so over the next 5 years. So I think there's definitely change. I think it probably needs to be done in dialogue with local authorities, and I think investors just building those relationships is the key.
And one of the things I wanted to pick up as well was in terms of the sustainability side, whereas previously, let's say there used to be, okay, we want to radically transform this, let's knock everything down and rebuild it in a different way. Are those times over? Are we looking at then only kind of sustainable investment where you're rebuilding, using existing buildings, transforming those? How do you see that? I mean, Florian, obviously you're looking at the development side a little bit more. How do you see that when you're working within a city to develop a neighborhood?
Right. I mean, there's probably not a general answer to that. We look at each project individually, right? So what makes the most sense, right, for us as an investor, but also taking into account sustainability. Right, so it's not a yes or no or black or white, so you have to look at it individually.
I completely agree with that. You have to take it asset by asset, location by location. For instance, using example of complete redevelopment of ours here in Munich called Tree, which is needed to be knocked down, the old building, and we building completely timber frame, very sustainable, very modern asset. So that's a situation where we would choose to redevelop completely from scratch. But obviously there are much different cases when we need to reposition depending on the city as well and the structure of the location as well. So it really depends.
I think certainly in London, we're very aware of this issue between embodied carbon in the construction process and then the operational carbon. And the City of London actually have a policy that when you go in for your planning application, you have to demonstrate if it's a new build that you weren't able to retrofit or repurpose the building first. So I think the assumption is let's make use of what we've already got, because I think I heard someone say once that the greenest building is the one we don't actually build. So it's just thinking about what already exists and how to make the best use of that.
Yeah, absolutely. Solly, you want to go?
I think there are challenges all round on this aspect. I think firstly, often refurbishment or restructuring of existing property can cost as much or more than building a new property. So I think that has to be borne in mind. Secondly, I think the way we plan construction, the way we time construction needs rethinking. Basically, we haven't changed the way we build properties, buildings over the past 100 years. It still takes 24 months to build. It's the way the different teams are organized is still a bit archaic and chaotic. And I think ESG could help us rethink that drastically.
Florian, you want to pick that up?
I would agree to that, right? I mean, there's huge potential to improve here, right? So it's actually when we build, it's kind of sustainable buildings we build today, but I mean there are properties probably in 10 years' time you have another problem with those buildings. So I mean, how sustainable are these really, right? So we can improve a lot here, yeah, but it's always not so easy. And I mean, finally, still we are an investor, and there needs to be some return in the investment. But as said, we need to have a long-term focus, right? Because it doesn't help if I have a problem in 10 years' time if I hold on to the asset, right? So I mean.
I'm interested in picking up just briefly as well. I mean, I mentioned at the beginning about the COVID crisis, and obviously at the time everybody thought there would be potentially huge changes for cities, and whether or not they would be resilient to that, whether people would still live in cities or everybody would want to move outside. Obviously, not everybody did want to leave cities, but has there been anything left over from that? So there were short-term trends, obviously, but are there any sort of medium, long-term trends, things that you've seen changed about cities? You know, whether that's something interesting, Solly, you were mentioning about a move slightly to the outskirts of Paris rather than right in the centre. But are there any things that are kind of lessons learned from that for moving forward?
One thing that was really interesting in the report, we also ask investors what are their favoured asset classes, and not surprisingly, retail had been doing pretty badly for quite a long time. And then this year, there seemed to be a resurgence in people's appetite for retail. And we actually interviewed the chief exec of Kaplan Regional, who are a shopping centre investor. And their view is when you take someone's ability away to do something, you actually make them want to do it even more. So there's almost, we actually want to mix, we want to shop, we want to be with people, because lockdown wasn't much fun, and we sort of suddenly realised what we were missing.
I can go with the lockdown wasn't much fun, definitely, yes.
But also we also have to think that we are coming into quite a probably serious economic recession as we sit here at the moment, so that the disposable income and that ability to actually shop and spend might not be there as that wave of after COVID was quite strong. But my view is that we might have a couple of very challenging years ahead of when the retail actually still will be under quite a bit of pressure.
And do you see that, Petra, as retail, let's say, when we're looking at traditional shopping centres, or do you think there's much more of a role? We've seen a big resurgence in terms of popularity of convenience retail, food retail, so those things that are maybe within mixed use elements of cities.
Yeah, it is about the mixed use. It is about mixed use is one of the elements, but also retail which can stand a little bit more resilient is maybe the retail parks or the non-discretionary retail, what you said, Richard, but also the stuff that we cannot buy online, the discount, for instance, which is very difficult to buy online, isn't it? You really need to go to the stores. So from that perspective, the retail parks or the outlet malls could actually be a little bit more resilient than the big shopping centers, which lots of it can actually be found elsewhere or online.
I also think retail needs to work harder. Retail is an asset class. I think more and more retailers have to change the way they're selling more often. Zara is a fantastic example of a successful store that seems to reinvent its stock and its styling every few months and in different ways in different areas, in different cities. And I think the pop-up store, the establishment of institutional pop-up stores, which historically were discounted, bad quality in retail areas that weren't successful, we had pop-up stores. I think we're going to see those in prime areas, well managed, where the transfer is well managed, and I think that will bring the public in.
Okay, good. Does anybody have a question? If they have, now is the time to ask it. Yes. In fact, I will just... Can I borrow yours a second there, Petra? Thank you. There we go.
Is it just on?
Yep.
Hi, Andrew Dunbar from the UK West Midlands, where we have 3 cities, including Birmingham, which is one of Europe's largest cities. We are noticing a trend that's been going on for some time now, which is that every year, I'm talking about not a COVID year, but a normal year, we have about 29,000 people leaving London to come to the West Midlands. Close to 9,000 of them going to Birmingham, and that's really driving particularly innovation-led brownfield development. So Birmingham, from a standing start, now has 1 million square foot of life sciences space. It's also driving moves in our housing market as well. And I guess it's really going back to what Solly was saying about how people are looking for a quality of life offer, but within a medium-sized city that they can still grow their careers. I guess my question is that something that you are seeing in other parts of Europe? And is it something that institutions or your institutional clients are tracking, specifically the demographic moves within internal migration, if that makes sense?
Yes, I think they're trying to do that. I think what strikes me about taking Paris as an example is I'm firmly convinced that there's an imbalance between capital attention of capital between Paris and the regional cities. And I think the regional cities are less speculative, so the highs and lows cause less damage, number one. And I'm still always surprised that funds that historically have invested in capital cities seem slower on the European continent to venture out into the regions than perhaps in the UK. And maybe it's the reason for that is there's a greater sophistication of real estate best practice all over the country compared to some regional areas of the European continent. But I agree with you.
Okay, good. I've got one last question, which is 2 questions in essence, which is one, biggest trend that you think that we're going to see, or most interesting trend, depending on which you want to do, and also where you see the opportunities, which cities you think, regions or cities you think are going to have the best opportunities. Why don't we start with you on trends, Claire? Let's start with you on trends, and you can decide whether you do the investment part of it or not.
Well, I live and work in the City of London, so my answer there is probably going to be quite obvious. In terms of trends, I think I want to pick up on Solly's point about experience, whether that's where you live or work or shop. I think everyone is looking for sort of experience, and I think real estate investors are taking that on board. So maybe some of the more operational elements of real estate, I think, will do well. Okay, great. Florian.
Well, in terms of trends, I would go for demographics. What we see there is, it changes the way we want to live. People are getting older and older, so lots of opportunities but challenges also in the senior living healthcare sector. So a lot of demand for properties which is not yet there. So that's where we see a huge trend and also huge opportunities in the real estate sector.
Okay, great. Solly.
I think the key word is mobility in all its aspects. It could be mobility in capital. It could be mobility in the workforce. We know and we see young professionals might not want to stay with the same corporation as their employees their entire professional life. I see this mobility in using co-living as an example. I see it again also in the idea of people wanting secondary homes where they can work from and live from and have a smaller place in the capital city. And I think that is the big trend which I see coming forward, irrespective of cycles.
I completely agree. It's about sustainability, livability, affordability. But also there is one more element where in LaSalle we see some opportunities, which is around the renewable energy and shifting from the situation where we are now, living in war ultimately, and finding a new green sources of energy. And it will open up a new cities that are not necessarily on our map at the moment. I can use example of Aberdeen, which has become a fantastic growth city from an oil perspective. Now with the wind energy and the solar energy, we wonder whether there will be more cities which are very interesting in Spain because of their access to solar energy, or northern coast of Germany or Holland with their wind ability to generate power as well, or the Nordics. So those are cities that are not necessarily on our map yet, but might become in the next 10 years, 15 years.
Really good, very interesting to think about that as a way of looking at cities and locations going forward, that the ability to be able to generate and be close to the generation of clean energy. Really interesting. Thanks very much for the questions. Thank you for joining us. Thank you also for joining us online. The next session that we've got is going to be, when it moves, well, I can tell you what it's going to be. It's going to be Germany anyway. But in the meantime, if you could join me in thanking both yourselves for being here and our speakers, that would be great. Thank you, everybody.